I'm Charlotte McLeod with investingnews.com, and here today with me is Ed Steer of Ed Steer's Gold and Silver Digest. He writes a daily column. He's been in the precious metals space for 25 years, and he's also on the board of directors for the Gold Antitrust Action Committee. Thank you so much for being here. Great to have you back after a very long time.
Yes, it's been a while, Charlotte, and I'm glad to be back.
Happy to have you here today. We've got so much happening in the precious metals space, especially when it comes to silver. And I thought you would be the right person to help people understand what's going on. So when it comes to silver, I know we're in a down day today for the metal, but overall, looking at 2025, it's been a record-setting year. And before we get into what's happening with the price being down today, I was wondering if you could go over the key factors that have allowed it to get past that $50 level and beyond this year, because I'm sure you're seeing a lot going on.
Oh, well, it all boils down to one thing. Okay, well, two things, actually. The last time we spoke was like 10 or more years ago. And at the time, I told you that there were 8 large commercial traders, most of them bullion banks and investment houses, that were mega short the precious metals. That was true then. That is even more true today, because they've been shorting this rally all the way up. And they haven't gone away, and then you can see the results of their bear raids on Friday, again on Tuesday, and again today. I mean, they're just trying to cover as many short positions as they can. They're stuck on the short side to the tune of, I don't know, $60+ billion. That's what the shorts are on the short side. And of course, the bullion banks are short a huge chunk of that. And there's no way they're ever going to get out of it. It was the same 10+ years ago, and it hasn't changed today. And what they're doing right now is they're just trying to cover as many shorts as they can, and before the next leg up in the price, and that's imminent. The other thing that's the most important right now, of course, is the ongoing structural deficit in silver. According to the Silver Institute, we're well into almost 6 years into a structural deficit where we're consuming far more than we're using, and it's like 100, 200 million ounces or whatever figure you want to believe. And the fact of the matter is, London had a meltdown. They just ran out of silver. And, everybody knows, everybody and his dog out there in the silver land knows that we have this structural deficit. And finally, these crooked commercial traders, the bullion banks et al., are finally allowing the price to rise to reflect the fact that, we were in a structural deficit. And we're sitting at, $48 an ounce today? I mean, it was 53 last week. But in reality, silver price should be well into the triple digits by now. And within a very short period of time, in my opinion, we're going to be there sooner or later. But, this price management scheme has been going on ever since Nixon took us off the gold exchange standard back in August of 1971. And finally, our day in the sun as far as silver goes and gold goes and all the other precious metals, it's finally here because everything's up big on the year, including the silver shares, which are up, 130% even. I think even though silver's down today, the silver shares are actually up on the day. And so we're up 140% in the silver shares and up 138% in the gold shares. So, this bull market is just getting started, and we have shortages in silver and also in platinum and palladium, and I wouldn't be surprised considering the huge amount of investment money that's going into gold and all the positive stories that are coming out about gold, about you got to add it to your portfolios. Like, I think it was Morgan Stanley said, you've got to, their model now is 60-20-20. And even Jamie Dimon came out and said he got to buy this stuff. This is now an unstoppable rally, and I'm sure that the reason we got kicked downstairs in the price is because the bullion banks are trying to get out before we see the next leg up. And this bull market has got a long, long way to go.
Well, this is a really great overview of the situation. So thank you for going into that. And it's so interesting to see those themes that we talked about so long ago playing out today. I'm wondering if you can talk a little bit more about the situation in London, because I've been hearing a lot about the lack of liquidity there and the movement of silver from New York over to London after it went the opposite direction earlier in the year. So I think investors have a lot of questions. Anything further that you would elucidate there?
Oh, sure, absolutely. This is something I keep religious track of, and let me just pull up something on my computer screen here. Yeah, I track the numbers every day, and as you correctly pointed out, there's been silver flying from the COMEX in New York over to London. So far this month, for the last 10 days, when it really started to pick up, 30.8 million ounces has been flown with a one-way ticket. And then also there's a Shanghai Futures Exchange. I keep religious track of that, and in the last 8 business days, let me see, what have I got here? During the last 8 business days, there have been 15.348 million ounces. That's 477 tons of silver withdrawn from them, and that's probably also in London by now as well. And that's not the only step. Besides COMEX and Shanghai, there's a huge amount of silver being shipped out of Switzerland. They have pretty hefty inventories there as well, and they only report their data once a month, and we won't see their October data for about another, I would say, another month from now. I think it's about the 3rd week, because I just got their September data now, so it'll be another month before we see their October data. But the fact of the matter is, the demand for physical silver is voracious, just absolutely voracious. I think it was Phil Baker, who used to be the CEO of Hecla Mining and also the president and chairman of the Silver Institute, did a video interview about 6 weeks ago now, where he said silver demand is what he quote unquote rapacious. And he said that we need far, far higher silver prices to close this gap between supply and demand. And he's 100% correct about that. And as far as I'm concerned, and when I heard him say that, that guy, with his position, because he's a swamp creature through and through, when people like that are coming out and telling you that, that is a fair warning to the entire planet that we are going to see triple-digit silver price. As a matter of fact, I got Keith Neumeier's triple-digit T-shirt on right now, and that day is coming. And Phil Baker spelled it out for us in full. So it's just a matter of waiting and seeing. But the silver demand is absolutely unbelievable from wherever you care to look.
Well, I wish we could see the T-shirt, but that's all right. We can imagine it. I think it's very appropriate for right now. And so, talking about this rapacious demand for silver, can you say a little bit more about where you are seeing that come from exactly at the moment?
The most obvious demand is coming from India. I think they imported 22 million ounces. Was it last month or the month before? And I can't remember. I should look at their quick estimates for September and see what they imported in September. But I should have done that before I went on the show, but I haven't got the information. But the demand from India is unbelievable. But the amount of silver going into the SLV and all the other silver ETFs like Sprott, et cetera, is absolutely horrendous. And, the world only produces, 2.2458, if I remember, million ounces of silver per day. That's all that comes, that's all the production we got. So when you see 22 million ounces of silver going into India in 1 month, that's 100 days worth of silver production. Or is it 122 million ounces? Yeah, that's about 100, something. It's a large amount of silver, okay? Huge, 10 days worth of silver production. So it's a huge amount. And when you start to see chunks like that disappear into India, or Turkey had a big import last month, and all the ETFs, and of course, there's retail bullion demand, which has been comatose for the last 6 months. It's been just awful. I mean, everybody was just buying the stuff back from customers they just sold it to because the price wasn't doing anything. But I've been in contact with 2 bullion dealers in the last 12 hours, and the stuff is just flying off the shelves. There's unprecedented demand in the retail sector right now. So they have problems with supply. I mean, they have decent inventory now, but they say right now that the mints and the refiners are just backed right up. So, I used to work in the retail bullion industry for 4 years part-time. And I can tell you right now, the supply chain from between the refiner and the retailer is 50 miles across, but it's only about an inch deep. So it doesn't take any huge amount of demand, 2 or 3 weeks at the most, and all of a sudden you're A, out of inventory, and B, looking 2, 3, 4 months down the road before you get any more. And we're heading in that direction right now, and everybody's buying this dip, whether it be the shares, like I said, silver shares, which are up on the day now, even though silver's down, and the demand ever since they killed the price by $4 or $5 off the charts. And like I said in my column today, what the bullion banks did literally on Friday, Tuesday, and today is they put gold and silver on sale, and the Far East is gobbling this up like you wouldn't believe. It's Diwali in India. It's their biggest festival of the year and the biggest wedding season. And all of a sudden you mark gold down 5 or 6% and silver down 8 or 10%. They're going to be buying this stuff with both hands. And trust me, so even though the boys managed to beat the price down, all they did was ignite this, what we just discussed was rapacious demand. So no matter what they do, the demand is just going to eat them alive, whether in the short term or the long term, one way or another. We're going to run into a supply-demand brick wall. And when that day happens, we could see triple-digit silver prices in a very, very short period of time.
Definitely feels like that is becoming closer. And you touched on a number of factors that I wanted to follow up on. So one of them was shortages for silver. It sounds like we're getting closer to the moment where it could be very hard to attain. And the other point I wanted to bring up, so when people are buying all this silver, is that in response to they see the gold price is very high, silver is a more affordable option? Is it more to do with silver's qualities on its own? How are you seeing it?
It's a combination of all those things, Charlotte. First of all, like I said, I was in the retail bullion business for 4 years, and people come in and they want to buy something, and even with gold at $500 an ounce, because I remember those days, and sorry I didn't buy more. Okay, you get $500, you get this little coin about yay big around, or you can buy 90 ounces of silver, which is far bigger, and they're both bright, shiny objects. Okay, and you look at 90 of those bright, shiny objects compared to one of those little gold, shiny objects, and you see, I'll tell you what, I think I'll take the 90 bright, shiny objects because people get more for their money. And the other thing, of course, now is everybody knows the supply-demand situation. Okay. That's where they're buying the snot out of this stuff right now. And the other thing is, other people have said, and I said in my column, I think it was on Saturday, silver has already become the new gold.
Yeah, I think we can definitely see that shift is happening there. So
Charlotte's going to get even worse as time goes on, because we're going to see gold. What's it, 4,000 now? Once it hits 5,000 or whatever, even the silver at $100 or $120 an ounce, or $150 or $200, because I figure it's going to be $200 to $400 an ounce at least before this is all over. And hey, you're old enough to remember when silver was $400 an ounce. Gold was $400 an ounce. Now silver's going to be selling for the same amount. But here's the thing that people can't visualize. As when silver blows sky high, and it will someday when the powers that be decide they're going to take their foot off the price, the thing is that it will not be available at any price. You can go to any bullion store, it will just not be there. The wait times for silver, as some people call it, at some point it will become unobtainium. And that day is coming, trust me.
Well, again, many directions we can go here. I'll ask, if we have silver going to $200 to $400 an ounce potentially, in your mind, do you have an idea of where gold would be with silver at those levels?
I don't know. The thing is that you have to look back. When you and I first interviewed me like 10 plus years ago, I said that this is the work of silver analyst Ted Butler and Gata, going back like 25, 30, 40 years in the case of Ted. And we have never seen what the true free market price of gold and silver are, because gold has always been fixed. First it was $20 an ounce, then it was $42 an ounce, and they finally let the price out, out in 1973, I think gold became legal in the United States again. And then in 1975, the COMEX started trading paper gold futures. So, and then the bullion banks have been sitting on the price ever since. We have no idea what the true price of gold is or what silver is, because it's never been allowed to trade freely in anybody's lifetime, including mine, okay? And so we just don't know. So if you're asking me what gold's going to trade at, what silver's going to trade at, I have no idea, but I can give you a hint. Right now, the gold-silver ratio is about 82 to 1. Gold comes out of the ground at 7 ounces. There's 7 ounces of silver produced for every ounce of gold. Okay, and everybody says the normal ratio throughout all recorded history is 15 to 1 or 40 to 1. And I think that someday, okay, with this shortage becomes really acute, you're going to see it trading close to 7 to 1 again. So whatever the gold price is, you divide that by 7 or even 10 if you want to be generous. And we're looking at just an absolute fantastic number for silver. So who knows? If they ever allowed to trade freely without futures and options attached to them, then we'll find out for sure, because right now I can tell you that gold and silver should be priced fantastically higher than they are now.
It would be uncharted territory, so very hard to say what could actually happen. And I'm wondering if you can talk a little bit more about how we're seeing the price perform today. So we mentioned it's a down day for silver, and I think you'd said the banks have their foot on the price right now. And as you're also saying, if they take their foot off, who knows what could happen. And I think people look at it and maybe they struggle with this. They wonder, all right, how do we know this isn't the end of the current rise that we're seeing? How do we know that something like that is going to happen in the future? So curious to know what you would say to people who have these questions.
Okay, gold's down, $33, and silver's down 36 cents. They're well off their engineered low ticks after the Globex opened in New York yesterday evening. But the thing is, you have to look at you have to pull out and look at the macro picture. Things are a lot different now than they were, say, 10 years ago. What we're seeing now in the overall is the decline of Western civilization, business, whatever you want to call it. The West, collectively, including us here in Canada, the United States, Europe, we are in decline. The East is in ascension, especially China, okay? With India and other countries and Russia not far behind. The thing is that, we're done, okay? And there's a new kid on the block, and they're called the BRICS Plus, and their presence is being felt out there right now. And we're just seeing it slip from the west to the east. We're selling paper, and they're buying the actual physical metal. And sooner or later, they will take control of the price, most likely in Shanghai, because it's a pure physical market, not paper, like it is in New York, where the price is set, and the price will be set in Shanghai. And it's all a physical market. There's no paper there whatsoever. So if you look at the price today, it's irrelevant what the price is today. You look at the big picture and look at the fact that the BRICS Plus have become an absolutely awesome juggernaut, and it's absolutely unstoppable. And as we shift from the west to the east, as this continues economically, financially, it's impossible to say where this is going to end up. But what we're living right now is we're living through a major shift in financial power from one sector from one area of the world to another, and they're going to be writing about this 1,000 years from now. So we're living through history.
Yeah, I think I'm also seeing a lot of questions right now when it comes to silver, especially people wondering, is this time different? We've seen silver get to this $50 level a couple of times in the past. And it sounds like, yes, it is actually different this time. I'm wondering if you can say a little bit more about the role of China in what we're seeing going on right now. I've heard a lot about China, especially when it comes to the growing influence over the gold market. So anything that you're paying particular attention to there?
Oh, yeah, just about everything China related. They're the number 2 silver producer in the world after, is it Mexico or Peru? I can't remember which country it is. Anyway, they're the number 2 silver producer. They're also the number 1 silver user. They also import a lot of silver. The stories are out there from, over the last couple of years. They're running all over South and Central America, buying up as much Dory bar and as concentrate as they can. And that's been confirmed to me by some of the miners in the industry, and I won't say who they are, because they told me not to mention. But the reason that they're buying this stuff up is A, because they want to control the price sooner or later, and secondly, they were trying to drain the North American smelters from product, so they didn't have enough to smelt. So this is a huge game. So they control absolutely everything silver related, and except for the price right now. So they also export a fair amount of silver too, and I keep track of that as well. Like I said, the Shanghai Futures Exchange, they've shipped out 15 million ounces so far in the last 8 days, and their stocks at the Shanghai Futures Exchange and the Shanghai Gold Exchange are the lowest they've been since 2016 as of today. If they keep this up, they're going to have almost no silver at all left in those 2 particular areas. So, silver is being drained worldwide out of Switzerland, out of New York, and out of Shanghai. But Shanghai is where it's going to be at. Like I said, they're the number 1 silver user and the number 2 producer. They mine more than they produce, and sooner or later they're going to control the price for that too. So China, India, the rise of the BRICS, especially China and India, Indonesia, and all the other places over there, Vietnam. No, it's China that's the number 1 country that we should be looking at right now, and sooner or later they'll be controlling the price too. And when they do, it's going to be a 3-digit number by that time.
Does the same go for platinum and palladium? Are they also of interest to the East?
I'll tell you what, these platinum and palladium are really fringe metals. I'm looking at platinum right now, and it's up $86 today, which I think is short covering. But the short positions in them are just as grotesque, especially platinum. Palladium, actually, the banks are actually net long palladium, if you can believe it, by a small amount. So these are really niche markets. Platinum and palladium are both basically industrial metals. Platinum, of course, has got some jewelry applications, and there was a big spike up in it. They've risen up an awful lot too, and there was big demand in China and Japan. And the thing is, these are dinky little markets, and the Platinum Institute has come out in the last year or so and said they're now in a structural deficit in these as well, where they're using up way more above ground inventory than is available, and of course that's coming out of all the platinum and palladium ETFs. So we have structure, because we've had prices have been suppressed for so long in the last 50 plus years, that the prices of everything are far lower than they should be, and that sooner or later the demand is going to pick up, and it's going to put us in a supply-demand deficit. The silver deficit is the one that everybody knows about, but it equally applies to platinum, it equally applies to palladium, and although you don't see it in gold yet, I can guarantee you that sooner or later, probably sooner rather than later, we're going to see a supply-demand deficit in it as well. And the reason for that is, I watch what's going into the various gold ETFs, and it's picked up hugely in the last month. And the other thing that's happening is that I watch every day is the deliveries on the Chicago Mercantile Exchange. The amount of gold that's being demanded for immediate delivery, and silver for immediate delivery now is, off the charts. Silver is in backwardation right now, which means it's more expensive to buy it. People want it now, and they're prepared to pay more to have it right now than wait for December or March deliveries, and the chances they're not going to get it. And gold is the same thing. I think it was 4,000 contracts delivered yesterday, and 2,000 the day before, and 3,000 before that. This is demand for immediate delivery. They're not waiting until December or February. They want it in their hand now. So the demand, we use the word rapacious for silver. Well, I'll tell you what, it's just about the same in gold, and sooner or later we're going to be in a deficit in that as well. And like, we discussed before, it's impossible to say how this is all going to shake out, but the one thing that's absolutely guaranteed, and like you said, you hate to use the expression, it's different this time, but the fact of the matter is, it is different this time. So when the smoke clears on this, whether it be in a month or 2 months or 6 months or a year, we're going to see fantastically higher prices, not only in the precious metals, but in a lot of other commodities as well.
Definitely sums it up. And I don't want to keep you overly long, but before I let you go, I did want to ask, so for investors who are looking at this situation, or maybe they've been in this space for a while, maybe they're just coming to it, any thoughts on how they may want to approach it? Of course, you should have your gold and silver if you don't already. For people who might want to add or get into it for the first time, what would be the best way to do that? And should people be considering mining stocks? How are you thinking about it right now?
Okay, first of all, I've been all in on the precious metals for about the last 15 years. Every penny I own is in physical metal or in precious metal stocks, mostly silver stocks, okay? But the first thing, if you're getting into this for the first time, the first thing you have to do is get on the horn to your local bullion dealer, the one you got in your city or the one you could find on the internet that's in your country, and get your hands on some physical. You have to have physical first. 1 ounce rounds, 5 ounce bars, 10 ounce bars, half kilo, kilos, whatever you can get your hands on. But buy that first. And, I have a very large position in physical because I've been buying this stuff since, 1998. So, I have a fair position. I also have a huge position in the silver stocks. And this is a sector that if you're a newbie to it, even if you're experienced, but if you're a newbie for sure, you do not rifle shoot this sector. You don't buy just the Pan American Silver or First Majestic Silver or Heckler, Coeur d'Alene or whatever, the smaller companies. You buy a basket of companies. And in Canada, the best vehicle for that, matter of fact, the only vehicle for that is 9 Point Silver Equities Fund, which is managed partially by Sprott out of Toronto. And I have a huge position in that. And it's also available in the United States as well. You'd have to, if you're listening in stateside, you'd have to look it up and see what it is. And if you're in the States, of course, the go-to there is SILJ. And because that's a basket of 20, 30, 40, 50 silver companies. So this is, like I said, this is not a sector you rifle shoot because it's just too risky. But at these prices, there's not a lot of risk involved, although there is some, geographical, political risk involved. But, this is where you should be. The 9 Point Silver Equities is very similar to the SILJ in the U.S. The product, the company mixes, the percentages are different and stuff. But, I own SILJ too. I own 9 Point Silver Equities. I own every other stock out there. I own about 15 or so other companies as well. Like I've been sitting here, since 2000, waiting for this thing to hatch into something. And finally, this year it really has, because gold and silver stocks are up well over 100% this year. And I beg you to find anything else that's returned that kind of investment, and that's only happened in the last 6 months. It's just amazing to watch. And the thing is, it's just got started.
Thank you so much for that. And really, what a time for you. You've been in this for so long, and to see it playing out. Anything final you would leave investors with?
I'll tell you what, when we started off when I ran into GATA in 1999 or 2000 or whenever with Bill Murphy and Chris Powell, we thought this thing would be over like 25, a generation ago. And Ted Butler, who's silver analyst Ted Butler, rest in peace, Ted, was been at this since 1986. So this has been going on for a long time. And, too bad Ted didn't live to see this, but, we've been living for this day, and the banks and the financial system have been sitting on precious metals prices, for a couple of 2 or 3 or 4 generations. And, before you were even born, Charlotte, So, after looking at it for 25 years, the fact that it's coming to an end, and that they've delayed this thing and right down to basically the last good delivery bar in London, okay, silver. They've delayed it so long that they've guaranteed that when this thing goes, it's going to blow sky high. So, I've been watching this thing for 25 years, and, I'm a lot older now than when I started, and if I'd known back then what I know now, I would have been in Bitcoin or the general stock market up until 2 years ago, and then jumped in now. But what a hell of a ride it's been, and like I said, the best is yet to come.
Well, that is a perfect place to end on. Thank you so much. It was great to reconnect with you. We'll have to have you back much sooner than next time. Thank you so much.
And I hope to see you at the Vancouver Resource Investment Conference in January, because I've already booked my room and got my ticket.
Oh, absolutely. Well, then I'm going to see you in January. Very good.
Oh, okay. And if you're lucky, if you get the time, I'll buy you a drink.
Amazing. Well, for now, once again, I'm Charlotte McLeod with investingnews.com, and this is Ed Steer.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.